Welcome back to Bootcamp episode 1. Today we'll be covering future contracts, the difference between minis and micros, as well as when these contracts expire and the different symbols for them. Jumping straight into it, it's very important to remember that 1 mini equals 10 micros. So micros are smaller than a mini, and it can be oftentimes more advantageous to trade micros with different account sizes, especially if you're maybe trading a 50k prop firm with Top Step or Mile from the Futures, whatever it may be. Micros are better as 1 mini can run through your drawdown pretty quickly. The key difference between these two is that for a micro, in any circumstances, whether it be ES, Dow, or Nasdaq, micros will always have an M before the rest of the symbol. So it'll be MNQH 2025. Now the H will also always change. In this case, it's H because we're using the March contract. We'll get to that in a second. So then that's your micro symbol. For a mini, it'll be NQH, so it'll not include the M. And it's the same for ES and Dow. So for ES, the symbol will always be ESH. The H changes and the 5 changes. So we're moving to a next year and a new month for the S&P 500. But for the micro, it'll be MESH 2025. So it's very important to remember if you're trying to trade micros to search to include the M, because if you're not going to have the M there, next moment you're trading a mini, and then you are not going to have a good day, to say the least. Now, in terms of the month contracts, it'll always be H for March, M for June, U for September, and Z for December. Now, these contracts usually expire on the third Friday of March, June, September, and December. So currently, we're trading the March contract and we're only on the 18th of Feb. So once we reach March and we get to the third Friday of March, then usually we'll switch over to M, which is the June contract delivery. And then that will be the same case for June. Once we get to June around the third Friday, we will likely switch to the U, which will then be September. Switching over to Tradeovate, a lot of these platforms today, they all have a setting somewhere where they'll auto roll contracts for you. So you don't have to worry about changing the U's or the symbols or whatever it may be. So on Tradeovate, you always want to keep this disabled, as it'll just keep on running contracts over when it gets time for it to do so. All right, now jumping over to the actual charts and placing trades, stop losses, and taking partials. Now, in the beginning, this can be very confusing, and I remember as well when I started off, it was not very easy, and I overcomplicated a lot. All right, to keep it simple, let's start with a buy limit order. So if we want to buy price down over here, so it'll trade back down to this, I'll put a buy limit in. So once price hits this buy limit, I'm tapped into the trade, and then my stop loss will always be below my buy limit because I'm buying. It'll always be sell one stop. So it'll always be something stop. All right. In this case, I'm buying 1 micro. So I'm going to be selling 1 micro back as my stop loss. And then if I want my TP, so my take profit, to be up here, I'll have a sell 1 limit. All right. Because I'm buying price down here and I want to sell it up here for when it's more expensive, therefore making my money. So I'm buying it down here at a cheaper price and selling it back up here at a more expensive price, therefore making my money. So that's the buy limit. And then, for example, a sell limit, I want to sell price up here. I'll click sell 1 limit. My stop will be buy 1 stop. So like I mentioned, stop will always be something, your contract sizing, and then stop. And then if I want my TP to be down, my take profit to be down at these lows, maybe I'll click and then I'll just click buy 1 limit, right? Because I'm selling price at a more expensive area. So at 22339, and I'm going to be selling it back, buying it back at a cheaper price, therefore making my money. So those are the limit orders. Pretty simple. It can get a little bit more complicated. For example, if you are in a trade with 3 micros, right? Let's say I am in a trade over here, and my stop loss is over there. And then let's say it taps me in and it trades down a little. Now I want a partial, or I want a partial. So I want to take some of the move off, secure some money. I'll just go maybe, all right, let's remove two contracts out of the 3. Then I'll just click buy back because I'm selling it. And if I was buying, I would click sell since I'm buying it. All right. And then you'll see over here, there'll be a remaining 1, meaning we have 1 contract size on. Then you'll need to ensure that you remove or change this 3 over here to a 1, as that is going to be very important, because if it remains 3 and you're only in 1 contract sizing, if it trades back to that, it'll tap you out for 1, but then there are still 2 contracts remaining. So it's very important to remember to always look at what this will say over here. So if you're in 1 micro or 2 micros, whatever it may be, it's important that it always matches these numbers. So that these numbers over here match how many contract sizes you are in, or else it'll tap you out, but then it'll add you into another position, which is not what you want to do, and which is very scary at times. I remember I was very confused. So just to cover, these need to match whatever the contract sizing amount you are in at the moment, or else you'll get tapped out and then add it into a position again, and then you'll probably be thinking, why am I getting scammed? You're not getting scammed. It's just you need to ensure that those contract sizes align and match up. In terms of executing a market order, very simple. If we want to buy where we are at price right now, you'll just click buy market and it taps you in, boom, right where we are. Then you want to put your stop loss wherever. It'll be sell 1 stop, and your TP once again would just be sell 1 limit. Since you're buying, it'll be a sell 1 limit. Now in reverse, if I want to sell over here, I'll click sell market. My stop would be up here, and that would be a buy 1 stop. And then my TP down here would be buy 1 limit, since I'm selling it. So if I'm selling, it's always a buy 1 limit. And then if I'm buying, it'll always be a sell limit as my TP. Looking at the rest of Tradeovate's features, it's pretty simple. You can save templates. You have your indicators, so your Fibonacci lines, your SMAs, whatever you want to use. I don't really use those at all, so I have nothing on my chart. Your drawing tools, whatever it may be, your time frames over here. I just normally focus on the 1 minute, and because I execute on the 1 minute, and obviously all my analysis is done on TradingView. So I just simply execute over here. As mentioned before, I only focus on NQ, ES, and the Dow. And then if you want to add whatever it may be, you can click this plus button, open a new tab. This is where we'll get crude, gold, whatever else you want to trade. Also, one more very important thing to note with Tradeovate, which is pretty nice, is if you are panicking or something's not looking or adding up right, you can just click exit at market and close. So it'll close all your limit orders. It'll close everything you want to close. Also, for example, let's say if you want to buy over here and you've put your stop loss in down here and you don't have a TP yet, you can literally just watch price push all the way up until you feel like this is where you want to close your trade, and you can just click exit. But for the most part, that is trading futures and the buy limits and sell limits, as well as the buy stops and sell stops. Can get confusing, but once you get under the wing, it's pretty easy to understand. Thanks for watching and enjoy the rest of your day.